this morning. Hi, my name's Danny Cohen from Prologue Consulting, and I'm going to be your moderator this morning. Welcome to the Altron Fintech launch of what we are calling the AFHRI, which stands for the Altron Fintech Household Resilience, Financial Resilience Index, which of course is a big mouthful, which is why we think it's going to be easier to abbreviate it for all of you as AFHRI. We are going to have three speakers today. We have Johan Galatli, who's the MD of Altron Fintech. We have Untitled Nyati, who's the CEO of the Altron Group. And our star of the star of the show is Dr. Roelof Botha, who is an independent economist and advisor to the Optimum Group. Just some housekeeping notes. It's going to take about an hour. If you can put Q&As in the chat or ask any questions. And Sandra will post a press release and slides, and we will be recording this morning. I apologize for the dog barking. I'm going to sort it out right now. So before it makes another noise, I'm going to hand over to Johan Galatli, who's the MD of Altron Fintech, to share his opening thoughts for us.
Thank you, Danny. That's the joys of working from home and not having control of all the environmental effects. So thank you, Danny, for that. We're delighted that members of the media have been able to join us today. Thank you for attending, and we really appreciate your attendance this morning. For those of you who are not too familiar with our company, Altron Fintech's operating entity, NewPay, is a division of the JSE-listed Altron Group. We provide secure payment and collection technology to the financial services industry. Today, we will be sharing with you the results of the first Altron Fintech Household Financial Resilience Index. It will be known as the AFHRI for short. AFHRI is a new quarterly index aimed at assessing the level of financial resilience among South African households, and most importantly, their ability to service their loans. We have partnered with a leading economist, Dr. Roelof Botha, who is the economic advisor to the Optimum Investment Group, who has developed, designed, and compiled the AFHRI and will present his findings to you today. The AFHRI is premised on the fundamental fact that income is ultimately required to repay debt. Without income of some kind, individuals are not able to qualify for loans that allow for expanded access to the full range of goods and services that comprises private consumption expenditure, as well as the funding of working capital required to sustain or expand small and micro businesses, which we're all aware of now, is dearly needed and crucial for employment in our country. The AFHRI is one of two indices developed by us. The second index, developed for us by economist Keith Lockwood from the Gordon Institute of Business Science, will be launched in a few weeks' time and will assess the overall economic impact of short-term credit in South Africa. Altron Fintech's rationale for creating these two indices is to provide the market with regular critical insights on the level of resilience of those who apply for credit, and more importantly, those that provide it. A point to note here that the people that provide this type of short-term credit mostly use their own savings to provide this credit into the market. They have specific relevance to the provision and state of microcredit, an important segment of the overall credit market, and often the only option for individuals and small and micro businesses. I would like to hand over to Mr. Untitled Nyati, our Altron Chief Executive Officer, who will say a few words before handing over to Dr. Botha for introducing the index and results. Untitled.
Thank you so much, Johan. Let me also echo you and welcome all of the journalists who have chosen to be part of this press briefing. We are truly excited today, like you have indicated. We're excited that as a company, we are part of this development that is happening in our country. We, as Altron, have what we call a purpose. We are a purpose-driven company. And our purpose is something that we hold dear to us. It guides all of the things that we do. The purpose is delivering innovation that matters. It's delivering innovation that matters. What it means to us is that we always have to go and look for opportunities to come up with new things that make a difference in terms of the society in which we're living in as a company. So we are a company that wants to be relevant, that wants to have a positive social impact. To do that, in order for us to deliver this innovation that we're talking about, we have to, on an ongoing basis, drive collaboration within our own company and externally. In this case, relevant to what we are announcing today, we are demonstrating once again the power of collaboration, not only internal within Altron, but with key players external to our organization. Here, Johan has indicated where we have partnered with GIBS, and in particular for this launch today, we have partnered with Dr. Roelof Botha, who is going to be helping us with this index that focus on looking at the ability of borrowers to repay their loans. We do know how important the economic participation is in our country and in driving the economic growth. We do also know how many of our players, of the people of our country, are excluded in terms of economic participation. It is because of this reason that as a company, we made a choice many years ago to be a key part of driving financial inclusion in South Africa. And we have done this by coming up with technologies that help micro lenders to be able to comply with the National Credit Act, to be able to lend responsibly, whilst at the same time helping thousands and even hundreds of thousands of people to participate in the economy. So this new development that is going to be announced here today is a development that adds to that drive that we have as a company. We are truly excited about it, and we're looking forward to be hearing from Dr. Roelof Botha, who will share with us the insights. And as a company that is in IT, we truly believe in data-driven decision-making. And this will provide key policymakers, key financial institutions, and general public with some data that is going to help people to make some key decisions. With that, I would like to welcome you here, and I also like to hand back to Danny, and thank you so much.
Thank you so much, Mteto, and thank you, Johan. And just before I hand over to Roelof, I'd like to just repeat a few of the things that I tried to say before my dog interrupted at the beginning. So just in terms of housekeeping, you're welcome to post questions in the chat down below. We'll get to the Q&A after Roelof's presentation. Also to any media who want to interview Johan or Roelof afterwards, please make contact with Sandra or myself. Sands has put our contact details in the chat, and she's also posted the press release and Johan's slides. So, and now over to Roelof. Thank you.
Thank you, Danny. Thanks, Johan and Mteto, for the opportunity to also become more intimately involved, as I have been for a while, in getting the message out there that short-term lending is a boon. It's an advantage to an economy. It has not been held in very high esteem by some sections of the South African media because of confusion, I believe. There are two things that stood out for me in what Mteto said, and that is financial inclusion and responsible lending. And obviously, Anything that falls outside of that scope, outside of the scope of responsible lending, often referred to as loan sharks, etc. This is not part of the discussion. This is not part of Altron's business. It is deplorable to a large extent. It's not something that we will be able to stop in South Africa or in many other parts of the developing world. But certainly the more rapid the progress is with responsible lending in the smaller lending section, also called microfinance institutions, MFIs, the better the chances actually of getting rid of these bad elements that are giving this industry a bad name. I just want to mention at the outset that in contrast to the negative perception in general of microfinance in South Africa, the industry is held in extremely high esteem in many other developing countries. An organization like the MasterCard Foundation with the European Microfinance Platform, they provide substantial research and financial support to monitoring progress with expanding credit to poor households around the world. India in particular has embraced the role of microfinance institutions a long time ago, and they are making substantial progress in what they've actually established. And this is fascinating stuff, and something which I firmly believe South Africa could, that we may be headed in that direction, and a company like Altron Fintech can obviously play a major role in this regard with all its technological developments. And that is to create a whole new tier of financial institutions, because right now, one of your problems is that between the microfinance institutions down here and the big banks over here, there's a huge gap. What they're apparently trying to do in India is to create a sort of a Premier League of microfinance institutions, who will then eventually not be microfinance institutions, but probably then medium finance institutions, but not quite up to scratch with the big banks. And obviously in this whole process, the lower down you are on the scale is about the higher interest rate you're going to pay. And quite frankly, I think there's also scope, if one wants to develop the concept of financial inclusion for relatively poorer households in South Africa, then I seriously think that there is scope for a little bit of subsidization from National Treasury to allow for interest rate relief. Okay, having said all that, I think I'm going to share my screen now and just run through the slides that we've prepared. Danny, are you still there? Johan, can you just show me a thumbs up? Right, we've got the slides up and running. Now, yes. What we did at the outset is we asked ourselves, okay, which indicators exist where we have reliable information, at least available on a quarterly basis, that will give us an idea of what is happening or is likely to happen to the sources of revenue or the potential sources of revenue of individuals out there. Whether they are rich or poor, it doesn't really matter, because this is, one can almost argue that what you're seeing in front of you now, that is a household financial resilience index for the median South African household. So obviously, if it was possible, which it isn't, to break down all of these 20 indicators which we've selected in terms of income quintiles, then it would paint a slightly different picture. What we wanted to find out is, in general, on average, and I'm reminded of a very well-known adage which says that the definition of a statistician is somebody that will tell you if your feet are in the oven and your head is in the freezer, on average you are quite comfortable. But despite that caveat, so we did manage to identify 20 different indicators. We've weighted them in terms of their importance to this answering that question: what is the trend for household financial resilience, their ability to be able to, at least in the medium term, to fulfill their debt obligations, etc. And we've covered our basis, because we've included sources of revenue which can give you a capital gain, which can give you dividends, which can give you rental income. We've that's why we've got 20 different indicators, and some of them are obviously less important than others. There are other intriguing sources of revenue, which we have seen coming to the fore because of COVID, and that is surrenders of long-term insurance policies, which is a very bad idea as far as I'm concerned. But the fact of the matter is that it does enhance the sort of financial resilience of households, because it gives you a lot of money all of a sudden, and hopefully you'll start saving again immediately. Also, as far as we have included with a relatively low weighting, also private consumption expenditure, because there are ways and means of generating income in this economy that is certainly not captured by the South African Reserve Bank or Statistics SA. And not all of that is related to criminal activity. So this is the result. And predictably, what we saw in COVID is a decline. And as I predicted last year, it has been a fairly swift recovery. At some point in time, in about April last year, there was a live TV debate on what the next level for the rand is going to be. You may remember 6 April, it went to 19 rand to the dollar. And the consensus was that it'll stick around 17, 18. Some of these economists were talking about 20, 25. And I told them that the rand will hit 15 before the end of 2020. I don't always get it right, but when I do, I tell people. And our economy has had a fairly swift recovery. One has to admit that not all sectors, all the key sectors have recovered, but not the hospitality-related sectors. The foreign tourists are still a little bit hesitant to arrive here, but with a bit of luck, they'll be here before the end of the year to spend some time in this beautiful country of ours. And as the hospitality industry comes into the equation, highly, highly labor intensive, I would really like to predict that the unemployment rate has a good chance of falling in the fourth quarter at least. Third quarter not looking good because of July. So this recovery is really quite intriguing to us. You would have noticed from the press release that if you had a look at that table, that on a quarter-on-quarter basis, if I remember correctly, only 6 of these 20 indicators had a negative trend. Since the inception, we chose a inception date, the first quarter of 2014, which is our base of 100. And as you can see, this index has never been below 100. If we can move on to the next one, if one were to plot here a trend line for the long-term trend for South Africa's leading business cycle indicator, obviously a lot more volatile than the AFHRI, the Altron Fintech Household Financial Resilience Index, because we smooth that with a 4-quarter average. Because of the volatility that you have every single year in the fourth quarter. People get bonuses, and because salaries and wages are, that indicator represents the biggest single weighting in our index. You will see that if it wasn't for if we had to do this on a quarter basis, it will have exactly the same quarterly trend as retail trade sales. It sort of it peaks in December in the fourth quarter, then it drops in the first quarter, because it's usually a pretty unproductive quarter. People are not back in the office on the 2nd of January. Some people are only back in the office on the 2nd of February, and some on the 2nd of March. So first quarter in this country traditionally is not a very productive quarter. People are still on the beach in many respects, and they've spent all their money as well. That's another complicating factor. And then it starts building up. Second quarter is better. Third quarter is even better. And then, of course, the fourth quarter with the Black Friday. And there's another one leading up to that as well now. But the fourth quarter is usually spectacular. Retail trade sales is a huge, huge indicator in this economy. But the long-term trend of the AFHRI and the leading business cycle indicator are correlated to each other. So, and what I like about this slide is that it tells us a little bit of our modern history. There you had the Nene dismissal, the realization also that this country was threatened by state capture, which is not conducive to confidence in the economy. We saw private sector capital formation, new investment in productive facility capacity also flattening in that period. Then Pravin Gordhan was reinstated as Minister of Finance. and things started improving as far as the indicator is concerned. There was a bit of a blip there, then maybe in the run-up to the election, then Mr. President Ramaphosa was elected, and there was a bit of Ramaphoria, as it was known at the time, and huge relief, of course, as far as I'm concerned, because here we, now all of a sudden, we had a president that, to my mind, has a better understanding of economics. That's my personal opinion. And of course, immediately embarked on establishing some policies aimed at economic reform. But before that could actually be implemented at scale, the COVID occurred. And of course, what one should realize, and you know, really, ladies and gentlemen, we're all adults. Anybody out there that does not believe that there is infighting in the ANC and that two camps exist within the ANC, within the governing party of this country, is so naive. They should rather, you know, semigrate, maybe to pits onder water. The fact of the matter is that there are still elements within the governing party that are not as keen on all the reforms as the president and his team. But we have seen some progress. I'll give you one example of the new approach where there is larger cooperation with the private sector. President Ramaphosa realizes that government cannot create jobs at scale in this country. The private sector can do it. And therefore, you need to remove the obstacles. When Tito Mboweni, the previous Minister of Finance, presented the new growth plan to Parliament and to the country, one of the key items there was the removal of obstacles to growth, obstacles in the way of the private sector. To give you one example, one obvious obstacle is labor legislation. So why not have a tiered structure? Why don't we place a moratorium on labor market regulations for companies and businesses that have a turnover of less than 1 billion rand a year, or less than, let's say, 50 or 100 employees? I mean, it's the easiest thing in the world to do. And it will be a catalyst for employment creation in this country. And we may get to pragmatic options like that. But COVID happened. And this was really a disaster. Look at the recovery. This country's leading business cycle indicator has hit an all-time high. So this obviously tells you that the AFHRI index is on the right track. If we look at the next one, slide that I've prepared, debt costs as percentage of household income. Now, I must just mention that this it's a composite indicator. So whatever trends, whatever individual indicators you have, they must move in the same direction. So when you have an indicator like this one, debt costs as percentage of household income, if this declines, it's good for the financial resilience of households, obviously. So what we do in the model is we calculate the reciprocal. So if this goes down, the reciprocal in the model goes up, so it has a positive impact on our index. And this is stunning news. There you had a little bit of a spike as a result of COVID, which did not even take it to the same level that it was at in 2015. One of the reasons for this increase between 2014 and 2016 is related to the departure of Jill Marcus when she retired as president of the Reserve Bank, because the new president and the new monetary policy committee, who were appointed by Mr. Zuma, they decided that the way to grow this economy is to take the real prime rate, prime minus CPI, from 3%, where it had been on average during Jill Marcus's term of office, to 6%. Now that is 100% increase in the cost of capital. And at the time, I was furious, and I lobbied tremendous, left, right, and center for them to please understand that, yes, we don't like high inflation. But if you have a choice between moderate inflation and more jobs, or very low inflation and massive unemployment, I think the answer is quite clear what this country should go for. Employment creation should be this government's only priority as far as I'm concerned right now. All the rest, all the ideological stuff, as far as I'm concerned, should just be put on hold until we create jobs at scale in this country. By the way, it's the most effective way to combat poverty as well. Financial inclusion is obviously also another way. So this was a positive one. Total salaries and wages. There you can see exactly the same trend line as with the index itself. And this is this is the most important individual indicator. So that has recovered very nicely. Employment in the public and private sectors. In the government sector, of course, it's very jolly over there. They don't have to add value to get paid in all government departments. And by the way, that's a theoretical public finance fact. But in the private sector, if you do not add an equivalent amount of value to your salary, then you're out of the door. And that's the beauty of the private sector, is it's highly competitive. And that's why most of the really good service that one gets in this country comes from the blue bars, as far as I'm concerned. Not the blue bulls, by the way, but they're doing quite well. So the private and government employment is, both of these are also have a relatively high weighting. Unit trust assets, we've chosen this as a proxy for the group of assets that provide you not only with dividends, but also with the potential for a capital gain. There are some shares in South Africa, and I'm not going to punt them by naming them, but if you had bought some blue chip shares as they are known, even if they were not paying dividends at the time, in March, April last year, you would have been in the pound seats today. And I like to believe it's not too late, because the price earnings ratios of some of our blue chip shares are still very low by international standards and by historical standards. The dividend yields are exceptionally high for several companies. And it's one of the reasons why government has been able to afford the extension of its COVID relief grant, and also to assist those retail firms and other organizations that were harmed by the unrest that we had in July. If we look at long-term insurance claims paid and policy surrenders, now both of these are insurance claims paid by the insurance companies. So both of these are sources of revenue for households that either surrender those policies or the other policies matured. And as you can see, I haven't gone to the trouble of adding them together, but you can clearly see that if you were to add the green and the red bars together, that there has been a very sharp increase in this source of revenue. And it does not carry a large weighting, but it has certainly boosted the index. This one is a negative one. This is a negative trend. The credit impairments by banks, that has gone up as a result of COVID, but it's interesting to note that that was on an upward trajectory even before COVID. And one of the main reasons for that is the fact that we are still battling to get our GDP growth rate up to where it should be. And it should be somewhere between 4 and 6% at a minimum. If we spend rapidly, if we make progress with the infrastructure program, if we can deregulate our economy and make it easier for business to start business, there's absolutely no reason why this economy cannot grow at between 4 and 6%. By the way, it did that. It grew at 5% on average for 4 years in a row. That's when I won the Economist of the Year competition. It was like taking candy from a baby, because my peers are usually ultra conservative. So hopefully this will go down. So just to explain, in our model, we have used the reciprocal of this one, because this is one of the downward effects. The prime rate and the CPI is not directly, they are not direct indicators, individual indicators, but they have a significant bearing, obviously, on this the whole lending and financial services environment in South Africa. And the good news here is that the prime rate is at its lowest level in 50 years. Yes, that's right, half a century. The CPI is still comfortably in the mid-range of the Reserve Bank's upper target. And I just want to mention something to our esteemed audience. It's always nice to speak to journalists. They usually know more than the median South African. But this target range of 3 to 6% was chosen decades ago. And the whole idea with inflation targeting internationally was never, ever to have a fixed target, a rigid target. This is not cast in concrete. So depending on what happens to your economy, if there's a pandemic in your economy, if you have a huge problem with unemployment, and that becomes a very important priority, and you have, you know, the oil price increases, fuel price, transport costs, etc., and you see that your CPI is heading towards 6%, there's no reason whatsoever why you cannot change the target. You can change the target range. You can change this target range to 5 to 7%. Take your pick, 5 to 8, whatever the case may be. So hopefully somebody from the Reserve Bank is listening. Total private sector credit extension has declined. We also use this, the reciprocal for this one, because if private sector credit extension is declining, it means that the ratios, for instance, of credit extension to salaries, etc., those ones will also be affected. And in our model, we've used this reciprocal. So in our model, this has had a positive impact on the financial resilience of households because they have engaged in less credit activities. And then, very interesting slide, the ratio of household debt to disposable income. Now, I do recall some media reports on you know, in the second quarter after this data got published, which spoke of, okay, this is now financial Armageddon. This is the end. And sometimes, you know, you should just have a cup of tea or whatever is your fancy. Mochaccino is my favorite, and just relax a bit, because it was predictable that this indicator would decline again, and it's right back to where it should be. And the long-term trend, obviously, is advantageous to our economy. And obviously, we've also used this reciprocal in our model. And then my last slide, which I have for you right now, and that is the real remuneration per worker. This is also a positive one, but we haven't included this one specifically because it has been subsumed in the salaries and wages, obviously. But the real remuneration per worker, the public and private sectors have recovered very nicely. And in fact, they are going places. One can also notice from the labor market trends in South Africa that the employment that is now being created in this country, most of that, the most significant employment, yes, you do have employment creation for elementary occupations as well, and that will be expanded as the infrastructure program rolls out, especially in construction. But most of the formal sector jobs being created now are, or many of them in event, are for the highly skilled professionals and highly skilled people. Unfortunately, they are also in demand internationally. So I'm just hoping and praying that most of these people will stay around in South Africa and help us rebuild this economy. Thank you very much.
Thank you so much. Thanks very much, Roelof. I was wondering, do we have any questions from the floor? Roelof, I wonder if you could just repeat for me. I've got one in my WhatsApps around, you know, yesterday's unemployment figures, and maybe just to talk again around how the relationship between those and what the index shows.
Yes, Danny, that's a very good comment, and I'm convinced that some of our journalists today may be lining up that question as well, quite frankly, because we must remember that this index of ours is based on first quarter 2021 data. We have to wait for the publication of the Reserve Bank's quarterly bulletin, which only takes place a couple of weeks after that particular quarter's GDP is prepared to be, because I'm guessing close to half of our indicators are only calculated later by the South African Reserve Bank. So we will only be able to present the second quarter figures, I'm guessing, in about maybe 6 weeks from now. And if these employment figures are certainly going to have a negative impact, the second quarter labor market survey, which was published, I think, yesterday, is that right? It was published this week. Yes. I'm holding thumbs that the GDP data for the second quarter will to some extent contradict the labor market data, as it often does. What worries me about stats is labor force survey is whether they have included the new sectors of economic activity in the services and technological domain. Because what has happened now is that there are literally thousands of young, bright South Africans that are involved with, you know, whatever there is to do in the information technology age, and there's a hell of a lot to do now with, you know, with Zoom rooms and etc. And that's why a company like Altron Fintech, I expect, will also be expanding its business, because the fourth industrial revolution, thanks to COVID, has been thrust upon us. If you want to stay alive in this economy, you are going to have to become tech savvy. Make no mistake about that. And people will have to help you to become tech savvy, because this is a complicated area. It's not the easiest thing in the world to do. And I have my doubts whether this plethora of small business firms, individuals, maybe, you know, 2 or 3 guys and girls working in a Zoom room, wherever, I don't think they're being captured by Stats SA's data. I must be quite honest. I'll give you an example. Retail trade sales in the second quarter increased by almost 5%. Wholesale trade sales, which is double the figure of retail trade, by the way, increased by almost 10%. Mining output increased on every monthly average in the second quarter by 17%. Now, you know, something tells me that if we're looking at GDP growth in the second quarter nominally of 7%, quarter on quarter, that's my prediction. How the hell can you do that with less people involved? And you will see that there has been a massive migration. If you interrogate the Stats SA data on the labor market, you'll see that all of a sudden, 500,000 people went from not economically active by choice. They're not looking for jobs. They're at home, they're looking after the kids, they're not tired of work, you know, whatever the case may be. Now, all of a sudden, they're classified as unemployed. And something tells me maybe this has something to do with trying to get on the bandwagon for this, for the COVID grant. There's something rotten in the state of Denmark, and I'm talking Denmark now, Stats SA. So I must be quite honest, I don't really trust all of those figures. The fact is that we have an unemployment figure in South Africa that is too high, whether it's 34% or, as I believe, significantly lower, maybe 20, 22%. The fact of the matter is that we have to create jobs. The minute you create a job in this economy, the minute you create a job, you are broadening the tax base. You're broadening the tax base. And if you take somebody's income from zero prior to having a job to whatever it is, 10,000 rand a month, 20,000 rand a month, I mean, the maths is quite clear. You have infinitely improved, eradicated poverty. Yeah. So quite frankly, instead of just, you know, taxing people at higher rates as the Department of Weird Ideas, I mean, welfare is concerned, you know, really, let's get cracking and create jobs, broaden the tax base, and then you can have some money to build houses, to expand health services, etc., to people, and to afford a basic income grant for registered unemployed people, especially if you do that simultaneously with phasing out the child support grant, which was the worst idea this government has ever had.
Thanks, Roelof. Roelof, I see we've got Teto's hand up. Can I hand over to you, Teto?
Yes, I just want to get some insights from Roelof. He indicated that when we saw the debt as a percentage of disposable income going up last year, where all of us were like worried, he kind of said, like, you know, you could almost predict that it's going to come down. Just share what drove that understanding, what drove that assessment from where you are sitting. So I would like to understand. The second question is linked to the real remuneration, which is we are seeing is going up both in the private sector, but it's much higher in the public sector. I would like to understand what's driving that, because I mean, when we look at our own you know, salary increases, we've seen generally that there's you know, either no increases or people are taking salary cuts to preserve jobs, you know. But this data that he's sharing, it seems to indicate that real RAM is coming up. So I'd like to understand what's driving that.
Okay, thanks, Mteto. I think you've in the process, you're asking a question which is in the minds of maybe some of the participants as well. But I prefer one question at a time. I'm going to try to remember. Okay, so as far as the first one is concerned, that spike in the debt disposable income ratio was obviously related to the denominator. In other words, disposable income in the second quarter of 2020 shrank dramatically. As you've indicated, I mean, I know dozens of firms where people took a haircut. Some of them decided, okay, 1 month no pay, next month 50%, next month we go to 75, and then after 4 or 5 months with a bit of luck we're back at where we were. So the basis, it's a ratio. So this thing that you're dividing it by shrank dramatically. So the sum just went through the roof. And as the people, now started earning money again, because I mean, you can't expect a factory that has overheads and is working on a marginal profit, on a small profit margin, to pay their people if government tells them the law now, temporarily, fortunately, is that you're not allowed to open this factory. So quite frankly, that was a weird COVID-induced issue. One should actually, if you were to smooth that out with a 4-quarter average, it won't be that bad. As far as the other issue is concerned, you see, in the public sector doesn't take haircuts. The public sector, they just get their salaries, whatever they do or don't do, and then they get increases all the time. In the private sector, the private sector is lean and mean and competitive, and the private sector salaries are always, in every single instance, related to the value that you add. A guy or a girl earning 10 million rand a year in the private sector, I can guarantee you, adds at least that value to that company. And if it hadn't been for that person, maybe 10 or 20 or 30 or 50 people in that company would not have had jobs. One should be grateful for people that earn large amounts of money, because they are usually incredibly good at what they do. They're good managers. They are technologically efficient, etc. And if something goes wrong with the demand and supply equation, you could find that somebody earning $1 million or $2 or $3 million a year could be without a job a couple of years down the line, but they always bounce back. And that is one of the main reasons why some countries manage to grow at a rapid pace, a faster pace than other countries for a sustained period of time, and in the process broaden the tax base to such an extent that they can afford to pay people, as in the United States, as in some European countries, the equivalent of, I think in South Africa, of about 20,000 Rand a month, for 18 months because of COVID, just in case they lose their jobs, is related to venture capitalism, entrepreneurship. A country that nourishes entrepreneurship, that makes it easy for businesses to start and grow and flourish without a plethora of regulations being thrust down on them. Those are the countries that succeed. And quite frankly, this is one of the central messages of President Ramaphosa's new economic policy, is that we need to become a more venture capitalist and more entrepreneurial economy in South Africa. And I salute him for that. Thank you.
Teto, are your questions both been answered, or do you want to do a follow-up?
No, I'm good. You have clarified, done a good job. Thank you.
Okay, no problem. Johan, do you mind if I've got a question for you? Thanks. So someone's asking, what are your clients in the credit market seeing in terms of growth or decline in credit? Have you had feedback from them? Is there anything that you could share with us today?
Obviously, during the pandemic, especially when we had those hard lockdowns and our sector was not classified as an essential service. And that really was for us an astounding decision to classify this crucial segment of nurturing the economy in our country should have been classified as a non-essential service. But we, together with our customers, pivoted into putting technological solutions in place where we could, where they could conduct their business in a not in-person mode, if I can use those words, i.e., they would extend credit via a platform like we're talking today, They could do all the national credit regulation compliancy activities, i.e. FICA, get electronic signatures, getting pictures of people on the application. So there was a fall of the cliff of credit extended from our customers. Some of them closed down permanently. But I'm glad to report during the latter part of 2019, when we ratcheted up the levels of restriction, they got back into business. And then we saw where they were cautious of extending credit into the market because of the indicators that Roelof presented to us this morning. Are their customers going to be able to repay the credit that they're extending? Do they have the ability to repay? So they upped their scoring and they upped their filters. So the credit was extended to long-standing customers that were repeat customers. So we're at about, I would say, 90% of the market where we were prior to March 2019. So we're not quite there, but the market is slowly creeping upwards, where the people are making more credit available, and they're lowering their scoring filters. And we're hoping that we'll be close to that rate, perhaps before Christmas this year, where the market will be at the levels prior to the pandemic starting. Does that answer the question, Danny?
It really does answer the question. Thanks, Johan. Teto,
Okay.
I think you'd also like to jump in here, wouldn't you?
Yes, no, I just want to ask Johan a question or two. Johan, first, to many of the journalists here, probably they don't quite understand that Altron was in this space in the first place. So it may help to just to share with us who are your typical customers and what is it that your fintech organization does. So that's the first thing. But the second big thing, when immediately you think about the space, you think, I think Roelof mentioned, you think about loan sharks and how do you deal with the issue of responsible lending? How do you deal with the issue of also complying with the National Credit Act?
Okay. Thank you, Mteto. Great questions. So I'll start with the last question. It's an easier one to answer. All the software that we use and we deploy at the microfinancing customers, we build that software in such a manner that it complies with a national credit regulator. So all the settings is preset in the solutions that should our customers follow those settings, and they get an audit from the NCR that they would pass the audit from a responsible lending perspective. So we assist our customers with the guidance so that they don't fall foul of the national credit regulations and criteria for extending credit. So that's just the start of where we try and be responsible. Obviously, you can't dictate to your customer how to conduct their business. So in our survey, there's about 40,000 unregistered, and what I mean by unregistered, microfinances in the country. They don't have an NCR registration number. So we don't provide our solutions to that market segment. We desperately try and educate that market segment, and we've got great members in our organization who try and educate that market segment to the benefits of being a registered, responsible lender in the market segment. So our customer base today predominantly focus on the responsible lenders in the country and who are seen to be following the national credit regulation criteria. So we assist them greatly to make sure that they are POPIA compliant, that their capturing of the information complies with all the FICA regulations. And then obviously we're connected to all the banks in the country because we have to collect the market. So So we've got about 2,000, 3,000, 4,000 microfinances that make use of our in-branch administration system for capturing the loans. And then once they have agreed to a number that will credit that will be extended, we will then onboard that onto our collections platform, and we'll collect that at the said date that was agreed to for collecting the debt. So we have got about a success rate, or a collection success rate. That is actually how successful are we that we are going to collect money from a person who has entered into a credit agreement. We command about a success rate between 85 and 90% in a month. So that's a clear indicator for us that our customers are doing the responsible thing. When they sign up for credit, they do a proper credit vetting and a credit scoring, because their success rates won't be that high if they were unscrupulous in extending credit to people.
Thanks,
Is that okay, Mteto?
Yes, thank you so much, Johan.
Thank you.
Thank you.
Everybody, thanks, Johan. We've got about 5 minutes left, so I thought maybe just before we close, I'd like to remind you that the press release and the slides have been posted in the chat group below. We also have a copy of the recording, which we'll make available after the briefing's finished. And then I'd like to just hand over quickly to Roelof. This index is going to be released quarterly. So we'll be providing updates on a quarterly basis to you. And I'd like to ask Roelof just to briefly summarize the key findings of the index once more for all of us, because I think we've heard a lot of information today, and I'd just like to leave you with a brief summary of what the index shows.
Well, I'll be very brief. I think the once the journalists have a look at the last page of on the draft I sent you, of course, you may have changed that, but the last table, if you page from the back, I think that table is very significant, because that table gives you, for each of the 20 indicators, plus the index value as well. So that you've got 21 rows here, and it tells you what was the percentage increase since the inception quarter 1 2014 right up to quarter 1 2021. To give an example, unit trust assets went up by 5.8%. Before I forget, all of the indicators are expressed in real terms. They have been adjusted for the consumer price index. Some of them, like employment, are is already in real terms. You cannot adjust a person for inflation, only your salary, of course. And then in the second column, you have the year-on-year increase. In other words, this is the percentage change between the first quarter of 2020 and the first quarter of 2021. And there are some surprising, really surprising trends, because remember, first quarter last year was before COVID. For the bulk of that quarter, it only happened really almost towards the end of March, when the lockdown regulations came into the equation. So one can argue that there shouldn't be changes like, for instance, unit trust assets increased by 35%. Now, that is clearly a result of, in general, over this period, and more risk on sentiment by international fund managers towards emerging markets, including South Africa, combined with the upward phase of the super cycle. And if there's any journalist that is interested in a copy of a short little piece I wrote about that recently, there have only been 4 commodity price super cycles in the last 130 years. And contrary to popular conventional wisdom, the last one, the upward phase, remember, super cycle has an upward phase and a downward phase. There was a belief towards 2010, 11 by some renowned economists that the upward phase of this 4th super cycle has ended. I disagreed with them at the time, and I've been proven correct, because it has not ended. We are still in an upward phase of a super commodity cycle. And as long as this lasts, we have a window of opportunity in this country to really get cracking with a broadening tax base, to get cracking with spending more money on infrastructure, on educating people, and making it easier for business to do business, quite frankly. And I believe Mr. Ramaphosa will grab that opportunity. But one also have, for instance, long-term insurance claims paid out, that increased by 33%. The surrenders by 23%. That's not entirely surprising. Credit impairments by banks decline, that the reciprocal declined by 25.8%, so that's a bad one. So this gives you a really rundown. Once you've studied or had a good look at table 2, I think there will be a grasp. And to summarize, in my last sentence, I make the following statement. The upshot of this quarter's, the launch, the first one that we publish of the Altron Fintech AFHRI, is that the average household in South Africa enjoyed a more advantageous disposition towards incurring and managing debt than before the pandemic, and that the long-term upward trend in the index is likely to continue. I've got absolutely no doubt in my mind that as we move into the future, that the index will improve again after this dip it took because of COVID. Thank you.
Thanks, Johan. I mean, thanks, Roelof. I know that was meant to be our last question, but actually I've got a question here from Given Majola, who's one of the journalists on the call with us, and it's to you, Johan. Asking, he says, the Banking Association of South Africa has pretty much concluded that businesses were reluctant to take on more debt in the current uncertain economic environment. How's the picture for your fintech? I mean, I think that does relate back to what you said earlier, but maybe you can elaborate a little bit more. And Mteto, I see you've got your screen on, so you might also want to contribute. Johan?
Thank you, Given, for the Thank you, Given, for the question. Yes, the banks have got a different view on what the risk is that they attach to any person applying for either short-term credit or for a personal loan. It is entirely different in the market segment that we service. Our market segment have got long-standing relationships with their customers, and there's an intimate relationship between our customers' versus the bank's customers. I don't know how many of you have attempted to speak to anybody in a bank. And your interface is a computer screen or a phone call or an email, and that's the extent of actually speaking to any banker should you have some issues. So we that are in the formal sector, our overdraft facility is, we have access to an overdraft facility, and it's easy for us to get access to overdraft facility. Now, the segment that our customers are servicing is a segment where people don't have easy access to an overdraft facility, and they make use of this microcredit sector for their emergency funding. So, should the car break down, or a person and one of their kids have to go on a school tour, or something at home broke, the place that they go for credit is actually servicing that an emergency. So we've seen, as I said in my previous statement, or we're expecting that our segment will be back up at the levels pre-COVID before Christmas this year.
Okay, that's great. Thank you. Mteto, have you got any last comments you'd like to make?
Yeah, no, it's not related to Given's question. Given, I think Johannes answered that fully. I just want to say that we are operating in a space that is not the most sexy, the informal sector, but it's probably the most critical for the economic growth of our country. It is precisely because of this is why we have decided to partner with Dr. Roelof. We need to base our decisions based on data, and it is very, very important that we also partner and work with the journalists around this, and because the more the space is understood in a right way, the more it is going to help our country to recover economically. So yeah, we are excited about what we have just done, this launch. We believe it's just the first step in all of the things that we need to be doing to help our country to move back up. Thank you, Danny.
Thank you. Mteto, I actually think those are the best closing words we could possibly have for today. Really emphasizes the critical nature of the index, what it's trying to show in such a critical sector in this country, and the work that Altron Fintech is trying to do to help do that. I'd really like to extend our thanks to Dr. Botha for his presentation today, for Johan and to Mteto for making the time to explain why you decided to sponsor and launch the index, and particularly to all the media who joined us today. You know where to find Sandra and I if you've got any more questions, if you'd like to interview any of the people from Altron Fintech or Roelof himself, and we look forward to speaking to you in the days to come. Thank you very much, everybody.